We've had a significant correction, absolutely. I would say that, frankly, I would be the first to admit, if you were strictly a technician and just looked at market prices, you'd have to conclude we're in a bear market. I am not a technician. I'm a fundamentalist. So in my 50 years of doing this, what do I look at? I look at the economy. I look at inflation. I look at monetary policy. I look at valuation. I look at bonds versus stocks. And everything comes up, saying it's a great buying opportunity. And that's as simple as that. And I have a certain discipline. Could I be wrong? Absolutely. My mistakes could be paraded up Fifth Avenue 5 abreast. But I think what's going on has a lot to do with the mechanics of the market. The technology has overpowered the market's ability to deal with it. In 1987, it was portfolio insurance, the rage of the day. You don't hear about that anymore, okay? In 2000, everyone wanted to be in high technology stocks. Cisco was 100 times earnings. Everybody's perseverating over Google, a fabulous company with a fortress balance sheet that should be using more of their cash to retire their equity, is a little over 20 times earnings. You don't have the kind of excesses that you had back then, okay? We had Nifty 50. I remember distinctly in 1972, I won't mention names, one of the star salesmen at Goldman Sachs, I was running research at the time, told me that we could close down the Goldman Sachs research department because all you got to cover is 50 companies. They're the world. Okay, and in that 50 companies, Avon, Xerox, IBM, Merck, and the philosophy of the day was we don't care about what we pay for the business as long as they're a world-class growing company. And then 73-4 hit the OPEC embargo, inflation, recession, and a bunch of those companies fell out of bed, basically, and it took, in many cases, more than a decade for them to recover in price. So I lived through portfolio insurance, I lived through Nifty 50, I lived through the high-tech boom. At the end of the day, 2.8 in a 10-year in a growing economy and a 15 multiple in the market says I would want to be buying stocks. I would change my mind if what I thought was going on in the economy, in the market, would dip us into recession. But as I pointed out, in 1987, you had a 22% drop in a day, okay, and everyone was yelling recession, and you had no recession. The economy continued to grow. And similarly now, we're down 10% from the high. We're doing things more fast, more rapidly than I would have imagined. But basically, it's a 10% correction, long overdue. And it's painful, but I'm more concerned they're scaring the hell out of the public. I just don't understand these models, and maybe I'm old-fashioned. Somebody once said, if you don't understand Bitcoin, it means you're old. I'm old. I know it's worked for me, and I say that common sense suggests to me that the regulators have to focus attention on what this new technology is doing to the market, the volatility it's creating. And, you saw it in January when everyone marked up their expectations for the year. You saw it in February where everybody marked down their expectations for the year. And it's kind of crazy, but you got to keep your head about you. And, when everyone's losing theirs. And I say that everything that's worked for me for 50 years of investing would suggest that we're near a low.